Hello students, how are you all? I hope you are doing well. Welcome to Purna's Commerce classes. In this video, we are going to discuss the adjustments for final accounts of sole proprietor. Right. So, we'll discuss goods used other than for sale. Generally, business purchases goods for the purpose of sale. Yes or no? Okay. Here I am going to take one example. Look at it. Goods purchased rupees 1 lakh. Rupees 1 lakh per cash. Per cash. So this is the transaction of purchase of goods. As this is a cash transaction, we record it in the cash book. Okay. But anyway, we'll simply write the journal entry for this. What is the journal entry for this? Purchases account debit 1 lakh to cash account 1 lakh. Yes or no? We are not going to prepare cash account, but we are going to prepare purchases account. Look at it. Purchases account. Purchases account. What is the posting here? Purchases account debit to cash account 1 lakh. Yes or no? Okay. Now these goods we sell. Okay. Right. So what is the entry for sales? Second transaction. Goods sold for rupees 50,000. Okay. Goods sold for rupees 50,000. What is the entry for this? Cash account to debit 50,000 to sales account 50,000. Yes or no? Yes. See, whenever we sell goods, which account we are crediting? Sales account. This sales consists of two things. One, cost element less profit element. Yes or no? Yes. So we are purchasing goods and we are selling the goods. By doing this activity, we generate some profit. I hope you understood. Now, apart from sale of goods, the business may use the same goods for various purposes. What are those purposes? Now we try to understand. Look at it. First, let us assume goods distributed as free samples. Goods distributed as free samples. See, generally in some businesses, some like pharmaceutical companies or some any other food industry, what they do is they distribute some goods as free samples to the customers. To the customers, that is retailers. Okay. Now, what is the purpose of distributing these goods as free samples? For advertisement purpose. Yes or no? Yes. So that what is the entry we record for these free samples? Either you may debit free samples or advertisement account to debit. Yes or no? Advertisement account debit. Let us assume goods distributed as free samples rupees 2000. So this is cost price. This is cost price. So 2000 cost of goods we distributed as free samples. Okay, right. Now, by distributing goods as free samples, will you get any profit? No, it is not possible. But goods are going out, not in the form of sales. If you sell goods, then we use sales account. But here we are not selling goods, we are just distributing the goods as free samples, so that goods are going out not in the form of sales, not in the form of purchase returns. Okay, now because of distribution of goods as free samples, our purchase cost of the goods gets reduced. When you purchase the goods, purchase account is debit. Now these goods we are distributing as free samples, we have to reduce the purchase cost, so that we credit purchase account. Simply we credit purchase account. Okay, do remember. Sometimes in the examination problems, when you are writing in the examination problems, they give you cost price as well as sale price. Okay, ignore sale price, take only cost price. Right, how much here? 2000. As we are preparing purchase account, so ultimately post this into purchase account by free samples account. Okay, free samples account or advertisement. Clear? 2000. When you sold goods, here we have not created, we have not credited purchase account, that's why no purchase account credit here. Clear? Next, we may use goods withdrawn or goods taken by proprietor. Goods taken or withdrawn by the proprietor, rupees 1000. This is cost price. But if you sell these goods, you receive 1500 rupees. But now you tell me, goods withdrawn by the proprietor. By withdrawing these goods by the proprietor, will the business get any profit? No. Business gets profit only when we sell goods. Apart from sale of goods, if you use goods for any other purpose, we don't get any profit. Do remember this. Now, the entry should be written at what price? Cost price, right? What is the entry for this? Look at it. Whenever proprietor withdrawn anything, then we debit drawings account. So, drawings account debit. How much? 1000. 2. By this, our purchase cost of goods gets decreased. So, purchases account 1000. Now, here purchase account is credit, post to purchases account. Posting credit side by drawings account. How much? 1000. Don't write the entry for sale price. Why? Simply by distributing goods as free samples or simply by withdrawing goods by the proprietor, the business will not get any profit, right? Next. Look at goods used in the business for repairs or maintenance, rupees 1000. This is also cost price. Now you people tell me, whenever we purchase, see, in case of normal retail goods, fast moving consumer goods, some of the items may be used by the business itself. Okay, now in that case we should treat the amount of those goods as repairs and maintenance. So what is how we record the entry? Look at repairs or maintenance account to debit to how much? 100. Because of this also our purchase cost of goods gets decreased. Here again purchase account is credited, so that simply go to purchases account, credit side, buy repairs and maintenance, or simply repairs. How much? 1000. Are you able to follow? Okay. Next step. Goods used in making asset or in manufacturing of asset for the purpose of business. For the purpose of business. Rupees, let us assume 5000 cost price. This is also cost price. Except sale transaction, the remaining all transactions of goods are written at cost price. Okay, right. Now look at what is the meaning of this. I will give you one example. I am running a timber depot. Timber depot. Here what is my business? I purchase timber and I'll sell the same timber. Yes or no? But what I did? This timber I have used for manufacturing of furniture, which is used in my business, which is used not for sale, which is used for my business. So furniture becomes asset for me. For manufacturing of this furniture, what I did, I have used the timber which I have purchased for sale. Okay, right. So we sometimes it may happen. In that case, what is the entry we record? See, furniture is asset for us. This timber we used in manufacturing or making furniture. So that furniture account to debit, how much amount used? 5000. 2. Because of this our purchase cost of goods gets decreased. So 2 purchases 5000. That's it. Now post this thing into purchases account. Buy furniture account. Yes or no? How much? 5000. 5000. And sometimes goods may be distributed. Goods distributed as donation. As donation. Rupees 1000. What happened here? I am not distributing the goods as free samples. I am giving these goods as donation. See, let us assume I have a cement shop. So I'm having a cement shop. Now what I did for construction of a temple, I have donated some 100 bags of cement. 100 bags of cement. Now, how do I record this transaction in my business? Yes or no? That is a question. Yes. So what you did with these goods, we have donated. So simply debit donation account debit. How much? 1000. 2. By donating goods, you will not get any profit. That's why our purchase cost gets decreases. Simply purchases account 1000. Right. Now credit into purchases account. By donation 1000. Yes or no? Next step. Not completed. Look at it. Goods may be, sometimes what happens, goods are lost. Goods are lost due to either fire or theft or accident. Okay, goods may be lost due to theft, fire, accident, whatever the reason it may be. The goods which we have purchased for sale may be lost. Okay, now what is the entry here we record? See, goods lost account. Goods lost is lost for us. Nominal account debit. All losses debit. Goods lost by fire. Whatever the reason it may be, you can write debit. Let us assume 500. 2. Our purchase cost gets decreased because this is abnormal loss. Purchases account 500. Okay, so here again purchase account is credit. Go to purchase account credit side, write down by goods lost by fire. How much? 500. I hope you are following, students. Next look at. Next look at. Goods unsold. Goods unsold at the end of the year. Let us assume we have some 30,000 worth of goods. Assume, these are just for assumption, 30,000 worth of goods. We purchased goods, some of goods we sold, and some goods we have distributed as free samples, donation or charity, whatever it may be. Next, some goods we used in the business maintenance purpose, some goods we used in the business for making asset purpose, and some goods we lost due to fire or theft or whatever it may be, whatever the reason it may be, and the remaining goods are lying in the business for as unsold. Okay, this we call it as what? Closing stock. This we call it as what? Closing stock. Understood, students? So for the closing stock, what is the entry we record? Look at simply closing stock account debit. How much is the closing stock for us? 30,000. So purchase cost gets decreases. Purchases account. How much? 30,000. So go to purchases account. Write down on the credit side. By closing stock. How much? 30,000. So balance this purchase account. Balance this purchase account. 1 lakh total debit. Credit set total 2,000, 3,000, 4,000, 9,000, 10,000, 30, 40,500. Put together 40,500. So 1 lakh minus 40,500 will give you 59,500. This is just example purpose. So this we transfer to where? Trading account. Yes or no? Purchase account balance. Finally, we transfer to which account? Trading account. So 59,500. Yes or no, students? Yes. But this happens practically. Whatever the approach we followed, this happens practically. But in the examination problems, how do we solve the same? How do we solve the same in the examination problems that we see? Look at. In the examination problems, what we prepare directly? Trading account. Trading account. Yes or no? Now look at. Let us assume we don't have any opening balance. Okay. Now, first we purchased goods. How much? Purchases 1 lakh. Purchases 1 lakh. Sales how much? We sold goods for 50,000. So by sales 50,000. Yes or no? Assume the remaining all transactions are given as adjustments. The remaining all transactions are given as adjustments. Okay, because we are talking about adjustments only. So for all adjustments, actually we should record the entry. All those entries are again posted into ledger accounts. From the ledger accounts, again we prepare adjusted trial balance. From the adjusted trial balance, we prepare final accounts. That happens practically, but in the examination problems, how do we solve? Look at it. First one is what? Goods distributed as free samples. Yes or no? Now look at minus. Here first we deduct free samples. Free samples, because purchase account balance decreases. Free samples how much? 2000. Deduct free samples. Next one, what happened? Next one, goods withdrawn by the proprietor, 1000 rupees. That is also we should deduct. Minus drawings. Drawings how much? 1000. Next, what happened? We used them for repairs. We used them for repairs. How much? How much we used for repairs? 1000. 1000. Deduct. Minus. Next, what happened? We have used them for making asset. Yes or no? So furniture. Used for furniture. Used for furniture. How much? 5000. Next, what happened? We have given donations. Donations. How much? 1000. Okay. How much? 500. No. Donation 1000. Donation 1000. Next, goods lost by fire. Actually, that should be deducted from purchases, but generally what we are doing, simply we are writing on the trading account credit side by goods lost. How much goods lost? 500. If you deduct from purchases 500, then it is also okay. Otherwise, simply write down on the credit side. That is also okay for us. Okay. Now, come to closing stock. Closing stock also should be deducted from purchases actually. Yes. So you may deduct closing stock from purchases like this, or simply what we can do, simply write down on the opposite side by closing stock. By closing stock. This is what we did in the practical situation, in the examination problems. How much? 30,000. How much? 30,000. That's it. Now balance. Here, what is the total you get? Look at 1 lakh minus 2000, 3000, 4000, 9000, 10,000. So that what you get? 90,000 here. 90,000 here. Credit side how much? 50,000 plus 500 plus 30,000. 80,500. 80,500. So that what is the meaning of this? We have a loss. We have gross loss. Okay, just example purpose. Gross loss. How much? 9,500. And this gross loss is taken to P&L account debit side to gross loss. By gross loss. C by D to gross loss. B by D. How much? 9,500. 9,500. I hope you understood, students. So in this manner, we do the adjustment of goods used for other than sale. Next up, we have every adjustment. We know every adjustment has twofold aspects. That means we have to show them in two places. One, Two places means either trading and P&L or trading and balance sheet or P&L and balance sheet. Yes or no? Now what is our assumption? The above things are all given in the adjustment except purchase and sale. Okay. Now look at free samples. Free samples. Free samples are first deducted from purchases. Next, as they are expense for us, simply debit to P&L account. Debit to P&L account. Yes or no? That's it. Next, drawings. Drawings, what we do, drawings deduct from capital. Capital we show in the balance sheet. So balance sheet, liability side, deduct from capital. Next, repairs and maintenance. Repairs and maintenance also expense for us. So that show it in the P&L account, debit side. Next, used for furniture. Furniture is asset for us. So this asset, show it in the balance sheet, asset side. Next, donation. It is also expense for us. So to donation. Next, goods lost. We have adjustment of goods lost. There we'll discuss about this. Next, closing stock. As closing stock is asset for us, this we show it in the balance sheet, asset side. So this is how we show the adjustments for the goods used other than sale. I hope you understood, students. So we meet again in the next class. So please subscribe my channel and like it, comment it, share it. Don't forget to click bell icon. Bye bye, students.